Nancy is another colleague from the European Investment Bank, and she's been and is the the chair of the subgroup dealing with this. And it would be interesting, Nancy, to hear a bit more, building on what Ayla's just said, how you're thinking of going about this, to the extent that you can already say this, but also questions around the methodology, the thinking around this. That would be really very interesting to see and hear. The subgroup, I think, basically, ultimately, the Commission will have to take the decisions as to whether or not, your recommendations are taken up. But that's the case, I think, for the whole platform. So it'd be interesting to hear your views. Nancy, thanks for being with us.
Thank you very much for inviting me to join this morning's meeting. And thank you to Ayla for doing half my work for me, and already raising a lot of points about the work that Subgroup 3 is doing in the platform. I should say that I am just back in Luxembourg from the UK, so I'm experiencing the challenges of quarantining, but I don't think it stops me from talking to you. So I want to go back to something that Ayla talked about, which was Paris alignment. And I realized that this only really, in many people's minds, means climate, obviously, because the Paris Agreement is about climate change. And of course, when we talk about the taxonomy and environmental sustainability, and indeed in the work of SG3, we are making a lot of effort to think about all 6 objectives in the taxonomy and make sure that whatever we are recommending or thinking about recommending works for all 6. And they are quite different. Some of them are very metric based, for example, the mitigation objective, it's really in large part about greenhouse gas emissions. Adaptation, on the other, is a process-based taxonomy, and of course the TWG are working intently on objectives 3 to 6, where I suspect that we will see a mixture of those 2 ideas. So we have to think about all 6, but let's just go back to Paris alignment for a minute and think about that. There's 2 big approaches to Paris alignment, shall we say. But what do people mean by it? Well, when they talk about Paris alignment, they're actually talking about Article 2.1c of the Paris Agreement, which says that financial flows must be compatible with low greenhouse gas pathways and climate resilient development. So it brings together mitigation and adaptation. And the 2 ways that entities around the world have been looking at this has been either a portfolio approach. So you look at everything you've got on aggregate and say, okay, this whole aggregate that we have, investments, loans, whatever it is, so equity investments in companies, it must transition over time to the net zero and climate resilient world of the future. And then there is a different approach to Paris alignment, which in fact has been taken largely by the multilateral development banks, but also others, which says, okay, we need to look at all the new things we're doing, but we can't recall loans that we've already given to entities already last year, 2 years ago, 5 years ago. So when we look at our existing loans, we have to think about climate risk and how we manage that. But going forward, we shouldn't be financing anything which is undermining these 2 Paris goals, the temperature goal and the adaptation goal. And these 2 approaches each have the pros and cons, the advantages and disadvantages. And I think when we look at how a harmful taxonomy might be useful in this context, we can see that some parts of the market might need to take a portfolio approach. Some might need to take more of a project by project, investment by investment, company by company approach. Others might go more for the portfolio, and others might take a mixture of the 2. And if I can just look at that for a moment, if you take a portfolio approach where you aggregate, for example, the emissions from all your investments, you know, you can still continue to finance, let's take the Article 19.3 activities in the taxonomy, that is solid fossil fuel power, as long as you do enough investment in forestry, which will sort of balance out the emissions. But actually there, in that aggregate pot, you have something which is clearly significantly harmful. On the other hand, if you do the single investment by investment, you could say that all of your investments are just okay. So in Paris alignment terms, so let's take the figures from the taxonomy, the climate mitigation figures for energy, where you have 100 grams for green for substantial contribution and 270 grams of carbon dioxide for do no significant harm. You know, you could have a situation where you say, well, as long as I'm all my investments are lower than 270, that's okay. But then in aggregate, that may not be very good, because basically you're still on aggregate extremely close to the do no significant harm line. And as those criteria are tightened over time, you might find that your portfolio actually isn't moving fast enough to keep up with the pathways to low carbon goals and the temperature goal. So there's pros and cons. And when we're looking at this in SG3, we have to think, how will the taxonomy be used by all these different players? But indeed, you can see Paris alignment as being perhaps similar to do no significant harm, to mitigation and adaptation together. And therefore, when you look at all 6 goals, you could see doing no significant harm to all 6 as being a type of Paris alignment plus, meaning not undermining the climate goals and also not undermining any of the environmental goals. And of course, when our colleagues have spoken or are going to speak about social taxonomy, then, you know, we can also see that the minimum social safeguards that we have, which will be considered further by the social group, are also about not undermining social goals while trying to achieve environmental goals. So all these things, my fantastic group in the platform are working on and thinking about. And I think that when we look at the purpose of a taxonomy and the purpose of the work we're doing, it is about clear language. It's about robust, coherent, and consistent definitions. And it's also about being aware of the scientific need to urgently transition away from these activities. And in doing our thinking, we have arrived at a conclusion that the do no significant harm criteria do represent levels of performance of significant harm. That is, in fact, what Article 17 says in the taxonomy regulation, that these criteria, this is what is significant harm to environmental objectives. And although in the context of the taxonomy, they are about screening out for otherwise green investments, we've looked at that and we've discussed it with a legal eye, and we believe that they also represent the level of performance of significantly harmful. But of course, there are activities that are not in the taxonomy and can never be in the taxonomy. And in fact, the taxonomy regulation identifies solid fossil fuel power generation as being not possible to attribute the criteria in the taxonomy. And we consider that there are other activities like that, which, if you were taking a wider look than mitigation, or even for mitigation, you might include in that box, if you were starting from the standpoint of saying, well, what might be activities that are going to be always significantly harmful? So I think it's important to highlight that our current thinking is that we're not suggesting that these different types of significantly harmful activities are either better or worse. We're not saying, you know, this is really significantly harmful and this is only partly significantly harmful. We're saying both these categories, like the ones that cannot be in the taxonomy, that cannot transition to a low carbon world, also cause significant harm, and so do the ones that are in the taxonomy, the activities that are in the taxonomy, which are performing at a level worse or higher than the criteria that have been set for do no significant harm. The difference is, what is the transition path for those activities? And the way we're looking at it in our group is that for the always significantly harmful, which you might think of as being Article 19.3 type activities, is the difference is that those ones cannot transition. They cannot exist in a low carbon future that we need to get to. And so therefore, of course, they're not illegal. But when we look at the scientific evidence, they need to be closed down, decommissioned, stop operating. And this obviously has to be done in a very managed way for two reasons. One is because this is where the whole just transition risk is, and where the whole focus needs to be in terms of managing the damage which would otherwise be created to communities, to economies, to regions, to cities. So it's really where just transition focus and policies is needed, both public and private. But it also, these decommissioning and closing down obviously also need to be done in an environmentally sound way. And we know that, mines of any sort, when they're closed, have environmental issues that go on for a long time. And so we have to think about that as well. But the fundamental point is it provides clarity, or it should do, when these activities are identified. It should provide clarity on that exact point, where we have to face the science and the very difficult choices it gives us and say, okay, these activities actually have to stop. How is that going to be managed? How are we going to focus in on those activities that have to be closed down or stopped? And how are we going to focus on the people who are employed and the investments in those? Because as Ayla said, the risk is still there, whether you want to identify it or not, whether you want to bring public finance in or not, whether you want to be transparent and report it under Article 8 or not, the risk is still there. And the risk, if you don't look it in the eye and be clear about it, is there's uncertainty, and you continue to have that risk, which will increase because you're not addressing it. So the transition risk will simply get worse. But we do also think that the other activities, the ones that can transition, we shouldn't be under the illusion this is less significant harm. It is not. It is the same significant harm. But the difference is that those activities can and must transition over the period to the low carbon goal of 2050, or in some sectors, of course, earlier, like in energy, by 2040. And of course, the entities who are doing those activities have some choices. Some of the choices are technical choices, some of them are financial choices, and so on. One might choose to stop doing something and do something else with the same output but in a different way, or one might choose to make investments in a plant or location which is performing that activity to change the level of performance. But either way, we believe that getting out of that significant harmful performance is absolutely essential, and especially in this critical decade. And so one of the other things that we're recommending, or we will be recommending, is that we identify and name the space between the substantial contribution, the green performance level, and the do no significant harm, the significantly harmful. And we believe that it's better to name it because it is there, it exists. There is an 100 gram, for example, for energy, and a 270 grams. And there are similar thresholds of substantial contribution and do no significant harm for the different objectives for many activities already in the taxonomy. So the space exists, and we believe that there's a worse risk in not labeling it and not being clear about it, that performance level exists. And it is not light green, and it is not all harmful. It is between the two. So you could see it as something which is going from almost a substantial contribution, almost green, down to almost significantly harmful. And we've decided, we're looking at recommending that it is treated as an intermediate space. So this is what we're looking at recommending. And we believe that gives us a color scheme, and I think colors are useful to talk about the taxonomy. And indeed, Ayla said, we don't want to use brown. We don't think it's appropriate and we don't think it's useful, but you do need some colors to discuss this. And so actually, I've done a bit of research on Wikipedia. I know that's a very low level of research, perhaps, but apparently every country in the world, apart from Bhutan, has traffic lights. And traffic lights are the same color wherever you go in the world. They are red, yellow, orange, or amber. Sorry, red, yellow, orange, or amber, and green. And so we've decided that this is a color scheme which doesn't have negative ethnic connotations and is internationally understandable. And we believe that what we think of as traffic lights for sustainable finance is going to be hugely useful in helping understand not just where is green and how can we get from even significantly harmful performance to green, but how can we get out of significantly harmful performance into this middle space? Now, there are some very important things to think about when we discuss this type of intermediate transition. One of them is, well, what about the activities that could right now go straight on to green? How do we make sure that we still incentivize that and we don't just incentivize moving out of significant harm and sitting there? Also, what kind of plans would entities need to show to demonstrate to their investors and to their shareholders and to their stakeholders that in fact they are moving out of this significantly harmful space? What kind of plans would be needed? What would need to be in those plans? And those are the kind of things that we're really thinking about still in detail. And when we go to public consultation, we will be asking a lot of questions on those sort of points to really gather more input on that thinking. But I think we're fairly clear that we believe this transition is important in many cases, and it needs to be identified. And I'll just stop before passing on to no significant impact by saying that we've also had some feedback in some of our Chatham House meetings with different financial actors, including corporates and banks, where several have said, actually, clarity on significant harm would be actually hugely helpful, because it allows for clarity in planning the transition and not being really at the whims of different points of view. It really would provide clarity, and it would allow for very clear transition planning. And now I want to come to no significant impact, because this is another very important part of the work we're doing, and say what you also have to remember is that even in the sectors where you have a performance level of green, a substantial contribution, you may be still emitting more greenhouse gas than many, many, many sectors which are not in the taxonomy. And a lot of these sectors with very low emissions, very low environmental impact, are actually in the service sectors. And what we are thinking about with no significant impact is, well, how can we differentiate those sectors which on aggregate, or even individual entities doing this activity, their impact on the environment is really very small compared to the activities that are currently in the taxonomy. So if you were to look at doing a complete economy taxonomy and you had to do every NACE code one by one, these activities, these service activities, that we may not get to them for years and years and years. And in the meantime, there's no clarity about what are these activities. They're not being reported under the taxonomy. There's no way really to distinguish those activities with very little impact from the always significantly harmful activities. So to take the portfolio discussion, you may have your green, but you have stuff which is not included. And you wouldn't be able to differentiate between the very harmful things which might be in there and the ones with almost no impact at all. So that's what no significant impact is about. I think there are a lot of questions about what's the best way to do that. We will be making some recommendations. And some of the things we've thought about, which we will be putting questions in the public consultation, is how do you address green services? What about if some of those service industries are providing a green service, for example, travel agents, for ecotourism? What about if you have financial advisors who are specifically advising on, green and sustainable finance products? That's one question. The other question is, every industry, every entity, and every activity needs to be made climate resilient to climate change impacts. And that has nothing to do with what their impact is on the environment. So even, something with a positive environmental impact, like, biodiversity restoration and other activities like that. They need to be resilient to climate change, and so do these service activities, the ones which perhaps would be no significant impact. So these are the kind of challenges we're thinking about. And I think that I'm going to stop there, because I think I've tried to give you an idea of the sort of questions we're thinking about, but the sort of the places that we're getting to. And I will now hand back to our moderator. Thank you.
No, thank you very much indeed, Nancy, for setting this out. It nicely complements what Nathan presented yesterday. He already presented this idea of a traffic light. I kind of added, half jokingly, you've got a stop sign underneath, you know, if in case the traffic light doesn't work, which is your social taxonomy, you know. It doesn't quite fit into your traffic light concept. But I think we're all very excited about this amber concept and the questions that you will raise about that in the consultation. Maybe I could just ask one or two follow-up questions. I think one, focusing on this amber space. I mean, one is a question we've been thinking about, which has to do with infrastructure. So a lot of these investments are long-term investments. And let's say, even if they're used at the moment for gas, whether good or bad and so on, but you need those infrastructures in case you develop novel gases or hydrogen and so on and so forth, because otherwise you've got hydrogen, but you no longer have the pipelines or the turbines to actually do anything with it. How do we deal with that? Because if we now take certain fossil fuels and say, look, they're not acceptable anymore, which, as I say, from an environmental perspective makes absolute sense, then the investments will also drop in the infrastructure, because there's no economic incentive to do so. So that's one question. Is there, and maybe linked to that is the whole life cycle question, because, as you say, that the targets will become more and more ambitious in the amber space. So investments are made now over a very long period, considering a life cycle, but in a way we don't necessarily know the end of the life cycle, because further investments might be made and so on. So how do we deal with those type of issues? Do you expect everybody to be, just take gas again as the example, under the 270 gram level now, right at the beginning, or can they try and show that throughout the life cycle? How do we kind of build in that dynamic element? I think that's a summary to the two questions.
Well, those are very pertinent questions. There isn't an easy answer, because the science is unfortunately rather serious in terms of what happens in this decade. Now, we're already in it. We should be under no illusion. We're already in the critical decade. We know the EU has set itself a very ambitious target of 55% greenhouse gas reduction by 2030. And other countries are also putting in place ambitious targets for 2030, as well as their long-term net zero goals. But when we look at biodiversity as well, we see the rate of biodiversity loss. This is really the critical decade for many of the environmental objectives. And the problem then is how to match up the need for extremely urgent action and transition in this decade with, as you said, long-term infrastructure. I mean, let's take an example of the road network. I mean, obviously, we know part of what the low carbon solution is for road transport. We don't have all of it exactly in place. We have various things which we think might be part of the solution for heavy goods vehicles. We're pretty sure we know what the solution is for cars and light goods vehicles. But in the meantime, the traffic that's on the roads is busy emitting carbon dioxide that we really have no space for. So what do you do about that? We have to somehow find the right way. What we need to do is, of course, incentivize much faster innovation and move the fleet on the roads to low carbon. And at the same time, we have to acknowledge, well, you cannot just magically get rid of all the vehicles that you've got right now. So how do we do that? I mean, I think that's where the taxonomy reaches its limits. You cannot do everything with the taxonomy. What we have to think about is, well, what other things are needed? Subsidies, incentives to encourage a faster change. Faster and more money spent on research and development for low carbon solutions, for where we haven't yet got the solutions, or where we haven't yet got them rolled out at cost and on large scale. In the meantime, I mean, you know, there are many people and many stakeholders involved in this who would say, well, in the meantime, don't expand road capacity until you've got the lower carbon solution, because otherwise you're going to have more of the current fleet emitting carbon dioxide, which we haven't got space for. So again, I wouldn't say, it is very, very challenging. It is very, very challenging, but we should be under no illusion about the speed of the transition that's needed. So I think we need the green investments. We still need to focus on that, because that's the stuff that's actually going to provide the solutions, and we need them faster, and we need more ambitious solutions. But we're also going to have to think about the story that we're telling about the existing infrastructure. And I would say that actually then entities that are involved in that, or in power generation, or indeed in heavy industry, all of the things which are very long term, they need to look at both. They need to tell the story about how they're going the long term low carbon, but also what they're doing to address the challenge of the current critical decade and the need for massive reductions in this decade. And I guess it will depend on whether they're public or private entities and what sector they're in, what story they tell. But these two things are really important. So we should never be under any illusion that we only need to look at the end goal. We also have to look at what needs to happen in this decade. And then your other question, I think that's another very interesting question. And those of you that may have attended our public webinars that we've done will, and maybe Nathan showed these slides yesterday. I'm sorry, I don't know. I was traveling back from the UK. We have something which we call falling curves. Now, we're aware that falling curves may not work for all of the objectives. So it's basically a curve which just drops down. I'm not sure which way around you see this. If I'm doing my finger moving in the wrong direction, then just imagine a mirror image of this. So it drops fast and then tails off towards net zero. And that curve is roughly the same sort of shape for the substantial contribution curve and for the do no significant harm, significantly harmful curve. And the space between the two, of course, we're coloring yellow, orange, amber. Now, what happens, of course, is that if you sit still, there is a danger in terms of performing at a certain environmental level, let's say for carbon dioxide equivalent emissions, or indeed for perhaps a level of circularity in your business, or you know, there could be some pollutant level which perhaps needs to also drop. But if you stay still and operate at the same level, you eventually fall into the lower category. So, for example, if you're in the middle space, if you're operating between the two criteria, and you sit still, then you will find yourself falling into the red space. And if even in the green space, if you're not already at low carbon or sort of positive environmental impact, if you sit still, you will at some point probably fall into the yellow space, and perhaps even into the red space. So what we see is this need for continuous improvement is very important. But of course, to do that, it's important that for each sector, each industry, each activity, there is a reasonable level of certainty of what the path is. And of course, for some of we don't know what the path is, because we haven't yet got the right technology. Let's take air travel, for example. We don't yet know exactly what it's going to be. And we don't know when it will be sort of available at scale, at cost. And we don't really know, therefore, what exactly the shape of the curve is going to be. So there is a challenge, because what we need is something that's predictable, sort of robust pathways, and so that plans can be made against that. And yet we know that technology changes can come very swiftly, modeling can change, and sometimes changes, you know, that we haven't expected might happen. So I think it is a challenge. All I would say is there is increasingly quite a lot of sector by sector pathway plans being developed, both in Europe and globally, by different industries. And I think a lot of industries are working on this. And then the best thing is just to make the plans against those kind of pathways, but always bearing in mind that things can change and things can speed up. In fact, technologies can develop sometimes faster. Ayla mentioned mobile phones, but similar things I think we're seeing with electric vehicles, for example, take up of electric vehicles. And there can suddenly become a tipping point where where it just happens much quicker. So that's the only thing I can say. I don't think there's an easy answer, but there's a lot of information out there about pathways for different sectors. And I would say that, that is really where entities performing different activities should be, sharing their experience. And I don't think they should be afraid of having transparent, publicly published plans, because then at least they can explain the logic of why they're planning to deal with this life cycle issue and lifetime issue.
Thank you very much indeed, Nancy. I think that was an important point. I think the key point I took away is the reliance on research and development, and as an important part in contributing to this. With that, a big thank you to you, Nancy. It was mirror image, but we could follow it nonetheless. And Nathan didn't use slides yesterday, but it worked really well. So thank you very much indeed.